Hi and welcome to this short video on a trade for the 14th of January 2014. Just before we start, let's have a look and see what we've got. The British pound has been trading sideways on the overnight. The market dropped down to support over towards the left and then reversed and traded back up against the previous day's closing price that we can see on the pivot. We also have a resistance here. We have 164 to the pound, and then we have the DP. So let's just roll the video, as they say in the film industry, and see what happens here. I may just have to move this on a bit so you can see the entry price come up here. So let me just drag the timeline a bit, and there you can see the entry has now been, the entry, stop loss and scalp target have been laid onto the chart there. We also have a long in the 60-minute at this time as well. So in order to move higher, the market's got to trade through the 164 psychological area and also the DP, which happens to be where the entry price is as well. So this can be a bit tricky, but the market is waiting for the CPI figures this morning from the UK. And this allows the market, whilst they're waiting, to try and factor in what is likely to happen and then move the market in one direction, and then when the news comes out, move it back if the figures aren't what they expect, or they wish to move it back having made their profit in the first hour or so. So here we see the market moving higher. We see the order being qualified now, and prices trying to penetrate through and drive through the DP level. DP levels critical, as we or you will have known from the pivot point videos that I record. And if you've not seen these, go and have a look in the training section in the members part of the website, where you'll find more information about these. They're a great tool, and as you can see here, the market is struggling at this area. The good news, though, is that the market's closed above the psychological area. So another half an hour later, the market's taken out the DP, tried to move higher. There's a bit of selling around, and we can see the selling here as well as the market was trying to move higher. And then eventually we see the market going on to actually take out the scalp. Left this trade for a particularly good reason, and that's the CPI figures were out 10 minutes in 10 minutes time. So there was a chance of seeing if the market would actually move up and trade towards the psychological area. So held the trade, and you can see now we've got a good 30 points out of this trade. We had a peak of around 33 pips, and then we see the news coming in there and prices moving lower when the news item was released. So all in all, a quick 30 points on this trade this morning. The market didn't quite make it to the psychological area, but what's interesting is to see how prices have turned around and dropped back towards the psychological area here. So no surprise, and I would expect the market to find support at this area, because the CPI figures were not that bad. If we just bring up and have a quick look, let me see if I can get this for you. Try again. So the CPI figures show a drop of 0.1%. Excuse me. The inputs increased and the RPI remained the same. So what's happened here is the market's been forced down, and then you can see the market starting to bounce. But I wouldn't be at all surprised if they retest this area here before starting to move higher. And I'll show you a quick trick and that you can do when the market is trading after a news item to see what's actually happening. So that's what we've got here, the news item coming out 9:30, removing the market lower after taking 30 pips on the trade. And it's one of the news items that I will get out of. CPI, interest rate, and the non-farm payrolls are the ones that I don't like, and also the UK unemployment. All of the others I'm not too bothered about, but because I'm trading a longer time frame, but those four generally stand aside, and it was obviously the correct thing to do here on this trade. So let's just bring up and see what's happening now. We've got the market still trading at that psychological level. What I'm going to do is just to create a price chart a 1 minute. It's going to have all sorts of rubbish on the screen, so I will just get and tidy that up for you. Let me just get rid of a few things here. I'm always looking to develop new ideas, so I'm just going to remove those for the moment. I'll leave the moving averages on because they're trading at an area where these longer term averages, and if you want to know what they are, let me just show you in the averages panel there. You can pick those up there, 189, 200 and 377. You can see the market sitting in that area at the moment and finding support. So this is a 1 minute chart. I wouldn't recommend trading off this time frame, but it's always fascinating to actually have a look and see what's going on inside of the 30-minute bar that we can see there. The market's moving lower. We want to see what's happened inside of this, then we can go to a 1 minute and we can see that the market's now just bouncing along at the psychological level, just below there at 163.96.7 at the moment. There's no selling around at the moment. We can't see any big volume. There's a little bit of an increase in volume there, but now we can see prices starting to bounce back. So at the moment, and it's not cast in stone, we could see the market move back to the upside. I mean, after all, hardly a problem with the CPI figures. They're actually showing a decrease of 0.1. No doubt manipulated, but you don't want to get me going on that subject about how the government's inflation is completely different to what we're seeing in the shops and fuel prices, etc. But that aside, and back to the 1 minute, you can see that the market is just holding at that level. And at the two moving average lines there, I will discuss this more in additional videos, and also this 377 moving average line there as well. So that's it for now. We can see the market's finding support, a bit of buying coming back in there. So the market's free to move back up, and back up to this line here does offer a potential of 50 pips should the market not move lower. Again, it will have to go through the DP level. We'll just have a look at this on the 30 minutes. It's got to go back through the DP and back up towards the highs there. So I just thought I would show you this, that there are ways of looking inside of what's actually going on to see if the market's going to hold at these psychological levels. You can see the volume, or by using the volume, you can see where it's coming back in and whether it's holding or not. Okay, that's it for now. I will see you in the next one. As ever, thanks for watching, and speak to you soon.